Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. Happy Tuesday, everybody. I hope everyone's doing well. All right, so let's kick off our session here with a quick review of what we have going on the economic calendar. Yesterday, if you recall, we had a lot of FOMC. May not have been Powell, but we had Clarida, Bostic, Clarida again, and when you see these events, everyone sees them. And if you notice, right around, I'd say within about a 5-minute window of every FOMC scheduled event yesterday on Monday's calendar, you saw some dramatic selling. Well, keep that in mind. I mean, the market seems to be preparing for these FOMC members, not Powell, by initially selling into the event. Now, it did seem like we recovered, but just heads up, these are going to be these high impact, schedule triggered volatility moments, which, especially if you're intraday trading, you need to be aware of and compensate for in terms of your hourly price movement range or volatility ranges and how to manage the risk. How did I manage the risk yesterday? I bought options. I bought options on the S&P at volatility and volume lows that I liked, and I went with the SPY so that when those events came that we knew full well that were on their way, we were prepared to deal with the volatility via a shift in basically the asset. All right, so today, not nearly as much. In fact, it's a pretty quiet calendar. We already had building permits, housing starts. That's in the rearview mirror now. And we go on to see what kind of mood this market is going to be in, sans any FOMC shenanigans. All right, so let's go ahead and dive into the questions. And thanks as always for being part of our Charts and Coffee crew. So speaking of coffee. Okay, first question is GM, hey there, Prabish, is GM and Kroger at a buy at the current levels? So I've been in and out of both of these when they were trending and even when they initially freshly lost their trend. But I'd have to say I'll pass on GM right now unless I've exhausted all the trending markets, which, there's still a lot of trending market setups either at the index level, Dow, sector level, there's a lot, and then individual stock level. Until I exhaust those opportunities, I'm really not interested in non-trending markets. And I would say Kroger is marginally better than GM. But keep in mind that as we head out to the sessions immediately following the dividend date, I usually expect a little bit of weakness or lethargy going into that. And that kind of weakness sometimes can be the setup, sometimes. So I'd have to say neither one of them I love, but Kroger could be marginally better. And not that they're not buyable, it's just that it's a completely different setup. And if you notice, based on some Darvis and even some volume alleged support, I'd say GM could be a 54.20 to 52.90 zone for an oversold buy. All right. So thanks for the question. Next up is thoughts on AMC. Oh gosh, with all the I know this was a big thing for a minute, GME, AMC, and clearly when we were talking earlier part of the year, the short squeezes that were happening, the Wall Street bets, Reddit forum. But now, I know they're still very jumpy, but there are so many more sane, non-forum squeeze. This is just a shenanigans play. And don't get me wrong, I love shenanigans. But when I look at the moves in less, gosh, I'm trying to think of a really good word that isn't going to be reduced to sort of the Reddit ridiculousness that goes on. Not that I have any issue with what they're doing. I think it's wonderful what they did. But of all the things that I could trade, I just think for me, and this has nothing to do with anything other than my personal preference, of all the things that I could do, this is just not where I feel I have a really good edge. And this is not where I have a trend. This is very much, is this a technical trade? please. This is whatever the sentiment within that forum is going to be. So I would say if you're going to do something like that, personally, I will not. I've got so many other better trades that are working within the context of a trend that are not going to be as susceptible to sort of the whims of Nurse Ratchet within a forum. You know how these things work, right? So if you're comfortable with this, hats off, because this is not the kind of environment that I prefer. So that being said, what I would tell you to do, let's get tactical. Let me give you some ideas to work this. Take a look at the site Swaggy, SWAGGY stocks. And they've got a really cool sentiment tool that sort of, looks through, scours the sentiment on the posts at Reddit. It's very cool. Check it out. I think you might, if you haven't already, check it out. It's pretty neat, but I'll avoid things like this. There's just too much other better stuff for me to be bothered by this, old narrative of Reddit and then just how fickle it can be. So and now having said that, I had my fun with cost. Cost has got to be one of the most fun, odd, scratch off ticket. Let's buy something for $7 or $8 and see what happens. Worst case scenario, it goes to zero. I did a cosplay when this was in full lunacy, and it was a blast. So don't get me wrong. I've never had it in my entire career. I've never had a trade where I buy something for $7 or $8 cost basis. Well, I guess Bitcoin would be kind of like that, but this was just a very, buy something for $7 or $8, and in 48 hours, it was nearly 9x. I've never had anything like that, and I don't want to hang my career on things like that. But it was a blast. Don't get me wrong. All right, next up. So I never want to dissuade you guys from doing certain things. If it's something you are comfortable doing and you've done it before and you've got a great strategy, not only for opportunity, but for risk management. But I love that you guys are looking across the entire landscape of opportunity. It's just not something that's going to end up on my plate that I want to stick a fork in. All right, XLE. Now this is one. This is reflation. This is macroeconomics. This is a massive market. It's not subjected to the whims of a board. It's tethered to crude and RBOB, which I'm also long in. And I think we're probably, moments away from a brand new high here. So this is a fantastic trade. It's closing in on the second standard deviation of my V-score. And so I know there might be a little resistance in this area, but I do anticipate with a double green environment, as you can see there at the bottom of the chart, with a double green environment, TikTok, I think we're on the right side of this with some really nice volume ledges for this market to stand on, a point of control, and very little overhead by way of a ledge that would impede our upward progress. I love this. Great setup. And it's I would say this is very much in line with what we've talked about since February and even earlier, which is this reflation macroeconomic, environment that we're in. Now, it doesn't mean they won't take breaks. I mean, XLE took a break for a while, but we remained opportunistic and patient because we knew that the path of least resistance was higher, and not only in the trend of this symbol, but also in the overall macroeconomic trend. So good stuff. And I don't anticipate this market doing anything but, for the most part, punching up to higher highs and pulling back from time to time to give us a chance to hop on. All right, next up is, we take a look at AAL, of course. So American Airlines is interesting, and we have to start at the Jets level. Reopening trade, Jets doesn't look so good. Of course, AAL can't be reduced to what happens in Jets, but again, it's doesn't matter the symbol. We have some nice volume ledges below. We kind of broke out of a very blue grab candle dominated breakout. Why would I assume a breakout and not a breakdown? Reopening, the trend that was, the overall look of Jets. But having said that, again, I'm going to go back to, of all the things that I could trade right now, unless I've got a very nice compression, I'm not going to trade non-trending stocks. I did toss my hat into the ring on Love because it had a better trend. But it's been a little tough with these airlines because, again, when you step out and look at the group of them, you look at all of them poured into this ETF called JETS, it's not got the same clarity as, say, IYT. It doesn't have the same clarity as, so you might say, Rog, okay, we get it. You're telling us what you don't like. What do you like? This kind of structure, gang. IYT, ITB, these are, if I'm going to contrast the look of a chart that has both the reflation narrative behind it and the structure, this is where I want to continue to focus. These types of market structures, double green, good support at the wave. So it's not that I don't like the reopening JETS trade. I tossed my hat in the ring on that one. But again, with the relative outperformer, that was LUV. And even that got very bumpy. Next up, can we take a look at XHB? Sure, related to the ITB. XHB actually is not as well structured as, well, I shouldn't say that. They're both quite good. If you wonder what the heck hit them, what hit them was the CPI last week. What hit them was once the CPI was released, what you saw was the knock-on effect of the 30-year yield heading higher. Now, if you're talking about home builders and construction, they're going to hate that. They're going to hate that the 30-year has any kind of trajectory where the yield could go higher. This market's also going to hate any discussion of bond purchase tapering from the Federal Reserve. They're keeping the longer end of the yield curve lower. That's going to benefit these markets. So it's not just the Fed thing, although it's very much going to be benefited from that, but it's also the perception that we have a housing crunch, which on many fronts we do. I have that working for us here, but remember, inflation numbers as they affect the 30-year, and then as they, again, the knock-on effect to the ITB, XHB, for the most part, look, we bought into this. We bought into that dip. Was it fun? If you ask any of the folks in the Sector Secrets Mastery, they'll tell you, whoa, that was butterflies in the stomach. But wow, that's what it feels like to buy a dip when you're certain of the macroeconomic trend, when you're certain that the trend that is going to persist in the continuation. Yeah, dip buying isn't for everybody. I think a lot of people sort of say, buy the dip, and that's such a rally cry, but most people don't, because that's sometimes what it feels like. But I'm not going to say no guts, no glory. What I'm going to say is if the structure is right, the probability is that you're going to be on the right side of the trend if you buy the dip. But the precursor is that there is a trend, technical and preferably the technical, overlapping with the macroeconomic trend. So I love ITB. Now, this is where the next step of ITB or XHB would be, do I want to go broadly at the tide level? Because we mix it up. In the Sector Secrets, we have just as much emphasis on tide as we do boat. I have just as much emphasis on the index or the sector or the industry, that ETF, versus the individual stocks that are in it, and those are the boats. So you might find there's a boat you like better. We talked about some boats in the room yesterday. But if I've already got exposure to ITB and XHB, which I do, be careful jumping into even the relative outperforming boats with a lot of weight, because remember, if that entire narrative rolls over, chances are the entire group of those trades that are tethered to that narrative will also roll over. And if you have too heavy a weighting in a single narrative, in a single sector, in a single idea, that's where you're going to see not just getting stopped out in one trade, but possibly all the trades that are related to the main idea. All right. So thank you very much. I appreciate that. Okay. Next up is DHR and T. DHR was one we talked about, Danaher. It is on my list. That's an XLV conversation, which we're already long XLV. So DHR is interesting in so much as it's a relative outperformer. But at the same time, if I already have exposure to the broader narrative, remember, now we're starting to layer on. I don't mind smaller positions. So if you know that you want to get into individual boats as well as the tide, take a smaller position. That way you can go wide, not deep on an idea. And I'm fine with wide, but wide is going to change the way you position size. Position sizing, of course, is related to the point of validity and account size and risk per trade and all those kinds of things, for sure. But another element, which is a little bit more objective, but still easy to recognize, is when are you really, really maybe overcommitting to a certain idea? And I don't mean at a singular symbol level, but across symbols that are pretty much going to ebb and flow with one another. That's great when they're all flowing in your direction, but when they ebb, that's where things can get kind of rocky if you've overcommitted. So DHR is cool. I don't mind, adding a single stock to the narrative of XLV. Again, it's one of the names that I wrote down yesterday on the planner, but we've already got exposure to XLV, so keep that in mind. The other one was T. Yeah, I'm going to steer clear. You know what that reminds me of? This is a very this is a pattern that isn't discussed very often. Star Wars fans out there? If you're a Star Wars fan, usually this candle should be red, and it looks like Darth Maul's lightsaber. Do I want to deal with Darth Maul's lightsaber? If you don't know, Darth Maul was a Sith, a bad guy. And you might remember him. He was a great character. He didn't have a huge role in that episode 1. But anyways, he had a double-ended lightsaber, which was so cool. Anyways, whenever I see the Darth Maul lightsaber pattern, you probably want to stay away from that unless you want to lose a limb. I will leave this alone. Is the structure bullish? Yes, of course. Really anything above $31 is buyable, but just be aware that, well, it's Darth Maul. Okay, so I'm only being slightly facetious. Okay, next up, let's see. As far as time horizon goes, look, I embrace all time horizons. There's just different buckets in our trading, right? If I'm going to focus on a longer term time horizon, I'll often buy leaps. I think that traders that don't embrace different time horizons, from intraday to maybe days to weeks to maybe months to years, are going to miss out on certain types of opportunity. But they are different buckets. And so if I'm going to play ARC, or if I'm going to be patient with my Berkshire holdings in my portfolio, well, yes. I mean, I give those portfolio additions 6 months to prove themselves. This idea that if we add something to the portfolio, we're just now married is, I'm going to give it 6 months. And if it can't prove itself in my portfolio, if it's not behaving in a way that merits the capital that I've allocated in my portfolio, I'll ditch it. And I think a lot of people maybe some people would be surprised at the fact that Berkshire Hathaway does the same thing. If something does not perform well, they will ditch it. A lot of longer term portfolio managers will have some sort of window of, hey, look, I'm going to add this to my portfolio, scaling in. And if it doesn't at least begin to show the signs of a potential performer, get rid of it and find something else that will. So there is this 6-month test that I will. So on my way to 5 years, there's, obviously some hurdles that position has to overcome. But yeah, I don't mind the patience at all. I just don't confuse it with my trading, to your point. What about, hey there, Deb. Hey, how are you doing, Debbie? Juniper? I've really been steering away from tech for the most part, although Juniper looks pretty good. We're coming into dividend date. We'll probably see some strength going into that. We've overcome some volume ledges, which is great, but I've just not been crazy about tech. The best parts of my book are tethered to macro, are tethered to countries, are tethered to a few currencies. So I've just not been crazy about tech. Remember, always imagine, well, let's talk about Grandpa Buffett for a moment. And I'm a huge Buffett fan. I think everyone should watch Becoming Warren Buffett at least twice. It's brilliant. The thing to remember maybe about trading that you can take from investing is Buffett used to have, and I'm going to probably ruin this story, but he said, you should imagine you're investing as having 5 positions that you can take for the rest of your life. You're stuck in those 5. And that's the sort of, and I'm not saying you should ever do that, but I think the story, the moral of the story, the point of the story is that's the level of discernment that he has exercised throughout his career. Can't argue with the results. He talks often about the degree of luck that he had to start when he did, to be a male, to have certain advantages. I mean, he talks about all the advantages that he had that made him this outlier. Malcolm Gladwell's outlined these things as well. Sometimes it's just being born at the right time and, in the right place, interested in the right thing. That aside, the level of discernment that Warren Buffett has, or that any great investor, Peter Lynch, whomever, has, we could definitely adopt as traders. Traders tend to, if anything, sort of let the discernment go by the wayside because the lack of commitment, days, hours, weeks, sort of makes us feel like we don't have to be as discerning. Watch list building is going to be what takes you, that and risk management is what takes you to the promised land of trading. Anyways, that's a great place to end. I'm going to go head on over to the futures room. So my futures folks, I will see you in a few moments for our open, and hopefully not as much volatility as we saw yesterday. And then options folks, I'll see you all for the power hour at 2 p.m. Eastern. All right, gang, have a great one. And my sector secrets folks will follow up on some of those recent trades, including corn, when I see you all sometime around midday in the chat room. All right, be good to each other. Same time, same station tomorrow. Talk with you then.